Amit Chadda of LTTS and ask him about various things regarding the earnings. Here are a slice of that conversation.
I do think this has been a good quarter, and let me tell you why. Number one is that look, we invested in H1 in differentiating ourselves with investing in AI, Gen AI, investing in various software-defined assets, if I may. And we had said that those investments the one-off investments will be over in H1. So as a result of that, you actually saw the margins go up to 16.2% in EBIT in quarter three. This is in spite of taking in about 100 bips hit on increments that we had in the quarter. Number two, if I look at the top line, year on year, constant currency was 8.7% up. In rupee terms, was 9.5% up. And in constant currency, again, 3.1% sequential growth in spite of seasonalities, furloughs, etc. So I think, again, on the second count, again, I think we have done fairly well as we stand. Number three, if I look at our tech vertical, which includes medtech as a segment, medtech as well as hyperscalers, etc., we've actually grown 11% plus quarter on quarter, and sustainability, which is the highest profitable segment for the company, grew 4% again quarter on quarter. Mobility, we didn't grow, and we had guided appropriately at the beginning of the quarter as well. But as I look forward, I do see mobility coming back quarter four onwards. Sustainability tech will continue to grow. In our mobility segment, we just don't have auto. We've got off-highway. We've also got aero and rail. That will give us the tailwinds to take it forward. Finally, in terms of deal wins, highest number of deal wins we've had in terms of large deals. So a 50 million win, 235 million wins, 225 million wins, and 310 million wins. These, again, are higher than what we have had significantly over the last few quarters. Pipeline, again, a lot stronger than it was a year ago, a quarter ago. The current quarter, again, very exciting for us. We are expecting some large closures, hopefully in the earlier part of the quarter as we look ahead. So I think all in all, a lot of work done this quarter. Finally, in terms of IntelliSwift, we announced the acquisition mid or early November, and we closed it, and it's integrated now 3rd January onwards. We've actually gone ahead and launched a new segment for the company called Software and Platforms, which we believe will help us address the service-led verticals. But I'll talk about that in a minute. But broadly, if you ask me, net, fairly pleased with where we ended up. Thankful to our clients, of course, and our employees as we stand today.
Okay, just one question as 2-3 follow-ups, but the first of them is this. I heard you say that there are some early large closures that you anticipate, or large closures that you anticipate in the early half of the current quarter, which is quarter 4 from an Indian parlance, or quarter 1 from a calendar year parlance. So would this therefore stretch the record pipeline even further in that sense? And by you saying that some large deals, is it more than 2? Is there a number that you're going to put there?
So if I may say this to you, that look, the dollar value of large deal wins in quarter 3 was higher than what we've had in the last maybe 12, 14 quarters. I'd like to confirm that as we thematically look at it and the kind of investments we have made in addressing new technology areas, second, improving client intimacy, and third, building a large deals engine at a segment level. Earlier, large deals engine used to be only at a company level. Now there are large deal engine parts at a segment, and each segment has their own teams. And given that, the pipeline being more robust, I do believe that this higher dollar value of TCV wins we've had in the quarter 3 will not be an abnormality, but will become a norm as we move forward. And I think at least for quarter 4, I'm sure I have a line of sight of what we'll be able to close, and then from there on. So that's what I'm trying to say. And that then gives me, shall I say, I'm fairly comfortable to say that FY26 should be a better year than FY25.
Yeah, certainly. I was about to say that what you're saying makes me believe that Q4 might, unless something unforeseen happens, Q4 might be better than Q3 in terms of these deal wins, and you kind of setting up an expectation of inflows for FY26 as well. Okay, one question, Amit, on the guidance and revision downwards in the scenario, maybe anticipated, even if it's disappointing because it's just the nature of the beast right now. But a couple of notes that I read say that even that seems to be a slightly difficult ask. So would you reckon it is within grasp, or would you need to run a bit faster and with more agility to achieve this guidance number?
So, there are two ways to do this. When we came to you at the beginning of last year and we said 8 to 10%, I'll tell you honestly, I had not expected auto to freeze up the way auto froze up in Q3 and is showing signs that it will still be a low in Q4 and then Q1 as well, right? I had not expected that. We had expected some other pluses, minuses, which happened as we saw it. So that's led us to do this, 8% organic and 10% with inorganic as we stand today. Now, as we go into the year, and there will always be a band that we'll play to. Now, when we had finished Q2, there were people that said, will you be able to deliver Q3 because ask is high and, there are furloughs. And I said at that point of time, work to be done, otherwise the quarter is over, right? And we did come through. I am comfortable at this stage to confirm that we believe that the ask rate, we understand where it is higher than Q3. Given that the number of working days is higher, given that Smart World part of our business actually has a slight uptick every Q4, I do believe, plus the deal wins that we've had already, baking all that in, a little bit of what we believe will close in the next 3 weeks. And those ramp-ups will start immediately. I do believe that we're fairly comfortable with what we've guided right now. In fact, the critical part and the important part to see is not just that, Neeraj, but I would actually look at where are we going, right? And if I look at the Intelli acquisition that we've done, that allows us to add 3, so we were already working with hyperscalers, they also work for hyperscalers. Together, we've got 3 hyperscaler accounts that are more than 20 million each in engineering alone, right? Number one. Number two, it allows us to play and get a right to win in the service-led sectors of retail, fintech, and healthcare that we did not operate in earlier. So I do believe that LTTS, as we go forward, that 2 billion ambition and with 17 to 18% EBIT looks a lot more in sight as opposed to before the Intelli acquisition.
Okay. That's the perspective coming in from the management of the company, which is buzzing in trade. It's holding on to gains of about 8% LTTS.